Glad to have you join us again. It's Business Breakfast on iBrand TV. It's time to talk. Take a quick look at the trading activities at the Nigerian exchange. Let's tell you that the Nigerian capital market on Thursday witnessed a 1.54% increase in equities capitalization at the end of trading session. The value of investment in the Nigerian capital market experienced a significant growth of 541.84 billion naira, rising from 34.97 trillion naira to 35.51 trillion naira, and the all-share index rose by 995.7 basis points to close at 65,263.06 basis points. Meanwhile, Sterling Financial took the lead, trading 69.45 million shares with a total value turnover of 238.09 billion naira, following closely with FCMB, which traded 33.33 million naira worth of shares at 217.81 million naira. However, Access Corporation also actively participated, selling 32.98 million shares valued at 568.98 million naira. Japan Gold traded 28.36 million shares with a total value of 228.84 million naira, and Fidelity Bank sold 27.55 million shares valued at 219.59 million naira. All right, Chief Investment Officer, Invest Data Consulting Limited, Ambrose Omodion, is with me in the studio as he gives us some in-depth analysis, as always, into some of these figures and the fundamentals that shaped trading activities at the NGSS today. Mr. Ambrose, always a pleasure having you on the program. Good morning.
Yeah, good morning, blessed.
We're having a conversation before we came on air. Another missed market. What is the rationale behind this?
For me, it's expected. I'm not surprised, and I told you we were likely to see that for this week. You know, after seeing most of the companies that had the same past year and releasing their half-year results, investors have kind of look at which company have posted a surprising number. Those that posted also disappointing number, and those that numbers are flat. And also, what in the sectors are they operating, and what are the factors in that sector that are going to empower the company to earn more, or kind of a policy that will trigger more activity that will boost their performance in that sector.
Okay.
Because every investment is against the future. Now, if that is what we're looking at now, and also from the angle of the government, I tell you that both fiscal and monetary policy has impact on company performance, because these are what to drive the economy front and back. You know, looking at the statement from the president, as regards palliative and other stuff, he mentioned some billions that went to different sectors, and it's going to be immediately.
Okay.
There, but we know that there's a prospect that something will come out from there.
Very true.
And also, we have seen stylishly that the monetary policy, whether they are not coming up open, they're gradually kind of bringing interest rate down. Because if, for example, now, I say that for those that are market bank and microfinance, your cash reserve ratio has come as well as 10% from almost 32. That means they want to free fund to go there. People have access to fund, and also now they say there's no cash limit for same market bank and microfinance. That means you can withdraw not like commercial bank. That means they know that we need liquidity in the system, and also the total basically the hike was a result of to look at not doing it at all. For me, they were even at even if you look at people that voted that about 5 voted that they should leave it unchanged. Why 6 voted that they should hike? Who did that? It tells you that even the body language of the president is that let's try and reduce the board. In an environment where inflation is on the rise, you can't just leave interest rate. For me, it's a welcome development. But also, gradually we are seeing that because of the hike, now they went ahead to also adjust the last Treasury bill from 5.5 to almost 12.5. That is about almost 100% basic point change, and that attracted funds into that space, leaving even the bond market bearish, and also equity market had a missed performance. It tells you that also gradually, if government comes in that direction, increasing rate to borrow, automatically going to push the private sector out of the system, because if you're coming out of there, who will give private sector at a cheaper rate? Because government, most times, if you crowd out the financial market with high rate, it will be a problem for the economy.
Right.
Now, these are what we're digesting, but I believe that between now and end of the third quarter, something will change. Because if you look at the result that came from the market sector, it's a very disappointing numbers that have sent signal that yes, something is happening because of this change of estate law, FS laws and all those stuff. But also the most for me concern for me that yesterday we saw one of the oldest company in Nigeria, GSK, announcing that yes, they want to leave Nigeria
after 51 years.
Indirectly, we have seen the sign that PZ might do the same thing and Unilever might do the same thing. Automatically, these people, they have people that engage in Nigeria, and we're saying we want to create employment, because if we have unemployment on the high side, as we're saying that, it will create also insecurity in the system.
Very
and
true.
The companies were ahead are gradually telling you that they are winding down. If they're winding down, those employees are going to lose their job, and that means for me, this is the time that the ministerial list of government to also let them hit the ground on it, to make a policy to encourage this so that this kind of trying to fold your company and go out of Nigeria is not ready for us, and also it send a negative signal to others that are there in Nigeria. We saw what happened to Nestle shareholders fund because of this, an almost negative total about 49 billion shareholders, which is a very for me a negative thing for our image. I believe that quick action should be taken now by government to know that between now and end of the quarter, they're able to put in so that all these FS loss will reduce, and also they will give them incentive, as he said, that they have a one digit interest rate. That also be a boost, and they say for almost like this 4 years arbitrary mentioned, if I can remember, it's a good one so that they can now use that to cushion the effect and continue, because I tell you, the more we see them going now, the more unemployment will be rising in Nigeria, and we need to open also other sectors to engage Nigeria. Let's use this digital world, and also other industry. We saw how telecom came to Nigeria. Today, they contribute most of the highest in our GDP.
Exactly.
We need to also look for another sector that the government to invest and open it up to also encourage. And what we need to do, not need to be just giving money. I believe that before you give money, have a plan. The next 10 years, in the next 5 years, this money we are giving to this sector should also bring in a good benefit to the economy and to the at large. For me, this is what to do. But for the market, there's no cause for alarm. What we saw this week, mixed market is a result of what profit-taking activities, and also people reposition their portfolio to enter where they see there's light at the end of the day. That's where they end. Because I tell you, like I said earlier, if you are buying a stock that is posting a loss, and you know that when you're posting a loss, possibility of paying dividend on the price responding to that is very low, because when the company posts a loss, it's only few companies after they post a loss will reverse up. But when the company is having a consistent positive earnings that is trending up, it's going to support the price to trend up. And that's why investors are looking at which company that posted positive earnings in Q1, in Q2, and the position are going to put in Q3 is there. You now move your portfolio to that sector, so that as you go towards the end of the year, because I tell you, at the end of September, we're already entering the last quarter of the year, and that last quarter is the most active sector in any economy of the world. People want to position ahead of that. That's why you are seeing this miss trend in the market. For me, there's no cause for alarm, but we need to invest with knowledge, combine your fundamental and technicals, also trading your plan. Don't trade on that man's plan, because your source of income, your motive, your objective is different from me. That means you must know why you're in the market, and so that when you have your plan, you know how to do your stop loss, how to take profit. All this will get you also to make money in the market.
All right, Ambrose, there's so much I want to we need to talk about, so many questions to ask, but we'll leave them for Analyst Hangout concerning the market, and also about the exit of GSK as well. We'll look at all of this at Analyst Hangout. Join us by 4:30 on Analyst Hangout this afternoon. But for now, this is the much time we permit us to take on this segment of the program. I'd like to say a big thank you to you. I'm Ambrose Omodion, Chief Research Officer, Invest Data Consulting, for your in-depth analysis on markets. Anytime, any day. Thank you for your time.
Thanks for having me. Blessed.
All right, still to come after the break, let's tell you that the Nigerian's payment industry recorded a significant growth of over 86% in digital transaction in the first half of 2023. We have more details in the moment. Do stay with us.